Welcome. Today we're looking closely at House Bill 561, which is called the Overtime Pay Tax Relief Act of 2025.
That's right.
And if you find this discussion helpful, please do like and subscribe. It really helps us out.
It does.
So this bill, H.R. 561, is basically aimed at providing some tax relief for folks getting overtime pay. Our mission today is really to get into what this could actually mean for you.
Exactly. We want to unpack the key bits of this bill, figure out who might feel the biggest effects. So let's dive into the core proposal.
Okay, so fundamentally, what's H.R. 561 actually proposing to do?
Well, the main thing is it introduces a new way to lower your taxable income. It creates a brand new section in the Internal Revenue Code, Section 2224, specifically for deducting certain overtime payments you might receive.
Okay, a deduction. Now, you said deduction, not an exclusion. Can we just quickly clarify that difference? What does that mean practically?
Yeah, good point. Think of it like this. An exclusion means the money, the overtime pay, wouldn't even count towards your income that gets taxed in the first place. It's just off the table.
Okay,
A deduction, though, comes later. After you calculate your total income, the deduction lowers that amount. So the income that's actually taxed gets reduced.
got it. That makes sense. And the bill itself, it has some specific wording about this deduction, doesn't it? Something about a limit, like a 20% cap.
Yes, absolutely. The bill explicitly states that the deduction can't be more than 20% of such individuals' other wages from the same employer for the taxable year.
Ah, so it's tied to your regular pay from that same job.
Exactly. That 20% limit relative to your regular wages is really important. It kind of suggests the bill is focused more on situations where overtime is, extra income, not the main source.
Okay, so we're talking overtime pay that might qualify. But how does the bill actually define overtime compensation? Is it specific?
It is, and it does this by linking up with existing labor law. It clearly defines overtime compensation by pointing directly to Section 7 of the Fair Labor Standards Act of 1938, the FLSA.
The FLSA, right, that's the big one covering minimum wage and, crucially here, overtime pay rules, correct?
Precisely. The FLSA, it mandates that non-exempt employees have to be paid at least 1.5 times their regular rate for any hours they work over 40 in a work week.
Uh,
So by using this established definition, H.R. 561 is clear. It avoids making up a new definition just for taxes and aligns directly with the employment rules already in place.
so basically, if you work more than 40 hours, get that time and a half pay, that extra money could be eligible for this deduction.
Right.
Keeping that 20% cap in mind, of course.
Right.
Now, who actually gets to take this deduction? Are there income limits people should know about?
Yes, there definitely are. There are specific adjusted gross income thresholds, AGI thresholds, that determine if you're eligible.
Yeah.
So if you're married and filing jointly, your AGI needs to be $200,000 or less. For folks filing as head of household, that limit is $150,000.
And for single filers?
And for everyone else, single filers, people married but filing separately, the AGI limit is $100,000.
Okay. Those income limits really give a clear picture of who this bill is aiming to help, doesn't it? Seems targeted towards middle-income earners.
Exactly. It's not a blanket benefit for everyone. When you look at those thresholds, it's pretty clear the proposed relief is focused on a specific segment of the workforce.
Now, you mentioned proposed relief. This isn't something intended to be permanent, right? I think I saw something about an end date.
That's right. The bill explicitly includes what's called a termination clause. It states pretty clearly that no deduction will be allowed for any overtime pay received after December 31st, 2029.
So it's temporary.
As it's written now, yes, it's a temporary measure.
So this potential tax break, if it even becomes law, would only be around for a few years. That's definitely something for people to factor into their financial planning. Okay, so how does this actually work when you go to file your taxes? Does it matter if you take the standard deduction versus itemizing?
Yeah, that's a really critical point for most taxpayers. The bill specifically covers both scenarios. For the vast majority of people who claim the standard deduction,
Right, most people.
the bill actually amends Section 63B of the tax code. It explicitly adds this overtime deduction to the list of things you can take even if you choose the standard deduction. It's what's sometimes called an above-the-line deduction in this context.
Okay, that's pretty significant.
Mm,
Because, yeah, most people don't itemize, so this makes the potential benefit much more broadly accessible. What about for those who do itemize their deductions?
For itemizers, the bill also includes specific tweaks to make sure they get the full benefit too. First off, it makes it clear that this overtime deduction is not treated as a miscellaneous itemized deduction.
Ah, the one subject to that 2% floor, where you only deduct the amount over 2% of your AGI.
Exactly. This deduction bypasses that whole limitation. And second, the bill specifies this deduction is also not subject to the overall limitation on itemized deductions, sometimes called the PEAS limitation. Though that's currently suspended, this ensures it wouldn't be affected if it came back.
Okay, so basically these changes seem designed to make sure itemizers aren't penalized and can deduct the eligible overtime pay up to that 20% cap, just like standard deduction takers.
Correct. The goal seems to be creating a level playing field. Whether you take the standard deduction or you itemize, you can potentially benefit if you meet the other criteria, like the income limits and having eligible overtime.
Now, thinking about, your actual paycheck during the year, if this bill passes, could people see a difference in how much tax is withheld?
That's a possibility the bill addresses. It actually directs the Secretary of the Treasury or their delegate, usually the IRS, to adjust the withholding tables and procedures. These are the rules under Section 3402A that employers use to figure out how much tax to take out of each paycheck.
Okay, so the practical effect could be what? Maybe eligible employees see a slightly bigger paycheck throughout the year.
That's the likely implication, yes. Because less federal income tax would potentially be withheld. It could provide more immediate relief rather than having people wait until they file their tax return to get the benefit.
That makes sense. More money sooner.
That seems to be the idea. Adjusting withholding could offer a more immediate financial plus for those who work overtime regularly and fit the bill's criteria.
Okay, let's try to pull this all together. Who specifically stands to benefit the most if H.R. 561 becomes law?
Well, as we've sort of outlined, the main group is going to be those middle-income earners, folks who consistently get overtime pay, remember, defined by the FLSA, and whose adjusted gross income falls under those specific limits we talked about.
Can you give us some examples, like what kinds of jobs or industries often see a lot of overtime, just to help listeners maybe see if this applies to them?
Sure. You often find significant overtime in, say, manufacturing, think production demands changing. Also, transportation, drivers, logistics folks often work long hours.
Right.
Healthcare is another big one. Nurses, doctors, techs, support staff. And public safety police officers, firefighters, EMTs. If you work in fields like these and your income is within those AGI limits, this proposed bill could definitely be relevant.
And the actual tax savings someone might see.
Yeah.
That depends on a couple of things, right?
Exactly. The real dollar amount saved depends on, one, how much of your overtime pay actually qualifies for the deduction. You have to remember that 20% of regular wages cap. And two, it depends on your individual marginal tax rate.
The rate on your last dollar earned.
Precisely. Because our tax system is progressive, someone in, say, the 22% bracket within those eligible income ranges would save more per dollar of deduction than someone in the 12% bracket.
Okay, let's try and make this even more concrete. Can we connect those AGI limits to the actual tax brackets using, say, the 2024 standard deductions as a rough guide? For single filers, AGI up to $100,000, what brackets are they likely in?
Okay, so for a single filer with an AGI up to $100,000, after you subtract the standard deduction, their taxable income would likely put them in the 10%, 12%, and 22% federal income tax brackets, maybe touching the very bottom of the 24% bracket.
So single folks in those brackets with overtime could benefit.
Potentially, yes.
What about head of household filers? The limit there is $150,000 AGI.
Right. For head of household up to $150K AGI, after their larger standard deduction, their taxable income would probably span the 10%, 12%, 22%, and again, likely the lower part of the 24% tax brackets. Same story, overtime earners in this group could be affected.
And lastly, married filing jointly, up to $200,000 AGI.
For married couples filing jointly, with a combined AGI up to $200,000, subtracting their standard deduction likely puts their taxable income in the 10%, 12%, and 22% brackets, and maybe just creeping into the 24% bracket as well. So again, households earning overtime within this range are the target group.
So it really sounds like this bill is primarily aimed at folks whose taxable income falls somewhere in the 22% bracket or below, maybe just tipping into the 24% bracket, across all the filing statuses.
That seems to be the sweet spot, yeah.
What about people in higher brackets then?
Well, if your AGI is over those limits, the $100K, $150K, $200K, depending on filing status, you're generally going to be in the higher end of the 24% bracket, or the 32%, 35%, or 37% brackets. This particular deduction, as written, wouldn't apply to you. The structure clearly focuses the benefit on those middle-income earners.
Gotcha. And just for a little context, who actually introduced this bill and where is it in the legislative process right now?
Okay, so H.R. 561 was introduced in the House of Representatives by Representative Bacon. From there, it was referred to the Committee on Ways and Means.
Which handles tax stuff.
Exactly. That's the standard path. The committee reviews it, might hold hearings, maybe mark it up. It's still early in the process. And it's important to note, if this does become law, the rules say it applies to overtime pay received after the date the law is enacted. It wouldn't be retroactive.
Okay. So to kind of wrap things up, what's the main takeaway message for listeners?
I think the core message is that H.R. 561 proposes a temporary tax deduction specifically for overtime pay, targeted at middle-income individuals. There are clear income limits based on how you file, and a cap on how much overtime you can deduct that 20% of regular pay limit.
So for you listening, if you work overtime pretty regularly and your household income falls within those ranges we discussed, this is definitely something to keep an eye on. It could potentially mean a bit more money in your pocket, either paycheck to paycheck or come tax time.
And that actually raises an interesting question for you to think about. Since this proposed deduction is temporary, set to expire end of 2029, what factors do you think should really be weighed when deciding whether this kind of tax relief should be extended or maybe even made permanent down the road?
That's a great thought provoker. Lots to consider there: economic impact, fairness, budget effects. If you want to read the bill's exact language yourself, you can always look up HR 561 on the congress.gov website.
Always good to go to the source.
Absolutely. Well, thanks for breaking this down with us today.
My pleasure.